Hey everyone, my name's Andy. My channel is Finding Value. If you like this content, please subscribe, click the thumbs up button, leave some comments below. We've got more data for our thesis, so I want to go over some charts, I want to go over some things to show you what it looks like. So we'll pop in here. More data for our thesis. We're looking at more data. We've got a declining dollar. Tips are going higher. Short-term tips are going higher. Bonds are going down, at least the yields, which should drive gold higher. And, gold's going down here. And let me show you some charts. Let's take a look. So here's the dollar. We've got a nice little breakout, looks like, to the downside. Momentum's going to carry this thing lower, it looks like. So it looks like we're coming right up to like a tip here, and it broke out to the downside. So it's one to monitor. This is a kind of a different looking chart. It broke out to the downside here out of this pattern. So they're both going down here. This is the dollar index bullish fund, and that looks like it's heading below this lower pattern as well. This is tips. This is a kind of looking, at a big picture view. We're obviously going higher on tips here. We had just a teeny blip, right? This is basically charting the real estate housing starts, and this is when real estate really started taking off. And I think this is going to continue to go higher. This is tips right here in a short-term chart, and you can see it broke to the upside, going higher. This is TIP in a different looking chart, obviously broke to the upside, and it's moving higher with some pretty good momentum. Here's the 0 to 5 year tip going higher from its downtrend here. This is another chart showing that it was peaking, went sideways for a little while, and then broke out to the upside. Here's the 10-year Treasury yield. Looks like yields are wanting to go higher. We've got this nice little pattern here. Breaks to the upside here, might go higher. But remember, this is trying to be manipulated. They're trying to push these things down, the yields. The Federal Reserve, that's what QE is all about. Push it down, control it. Looks like they're doing okay on the 30-year. It looks like it popped down on the downside, heading lower. This is the gold price, looking at it from a 10-year view. And you can see we've got support here, and this price is coming down, and it's probably going to tag this support line down here. So I think it already did it today. So you're probably going to see this thing, hopefully it goes higher, because this is about 1775. This is what Great Britain's price did right off the tops of these two patterns here. That's what I put there. Off the top, it came back, touched it, and went higher. So that's Great Britain price in gold. This is the yen, Japanese yen, and it looked like it broke its downtrend here. So this is kind of concerning. Not sure what's going on there for the Japanese yen, gold priced in the Japanese yen, but this looks like it's heading lower. Here's the TNX. This again, one thing I want you to focus in on is in January, we could see this 10-year really start to drop, and then it dropped even more here. Again, this is copper. Again, this is, January, it started dropping big time, saying that the economy is having a problem. But if you look over here, we just broke out of a gigantic chart pattern to the upside for copper. This is probably going to go quite a bit higher. So Dr. Copper is telling us that we're probably going to have inflation, not deflation. Now, I agree, this looks a little weird coming back here to the 30-year, that it's going down, but we also know that they're trying to manipulate the yield curve. They put all this stuff in there to manipulate the yield curve. So maybe that's what they're doing. That means higher real negative yields, which means gold's going to go higher and commodities are going to go higher. This is the SPX. This is when it got hit really hard. It was about, end of February. And this was really tracking down for copper. Same with the 10-year Treasury yield. That was tracking down quite a bit, signaling a crash. We don't have that right now. We don't have this thing breaking all the way down, shooting lower. So I don't think there's any problems yet, at least. I don't see anything. And copper breaking up to the upside, that's huge. So we've got the S&P breaking up to the upside because the economy's recovering. So, going over this, some of these big picture things, and platinum about to break out to the upside, that's all inflationary. Is there deflation coming? I would suspect it's not yet, if it's going to come. We don't see it in the charts. Our indicators are not telling us this. And they all flashed warning signs before the COVID crash. So they all flashed warning signs. They are just diving like the economy was done. They're not showing that. They're showing the opposite. So we're seeing dollar weaker. We're seeing gold back testing its previous highs back in 2011. And everything else is looking pretty good. So I think our thesis is still intact. I think everything looks very good. I don't think there's really too much to worry about. And we're going to continue to monitor these indicators. Real estate's going higher. Copper's going higher. Platinum's going higher. Silver and gold are in a pullback. And we want to monitor that. And I bet you they're going to take off after December 1st. And the reason I say December 1st is there's a large COMEX delivery December 1st. I don't know who the heck's taking this thing. And I don't know if JP Morgan's pushing this price down. I don't know. But there's people saying that's the case. And then it's going to go higher most likely after that delivery. We'll see. I don't know. But everything else is looking pretty good. So if you like this content, click the thumbs up button. Please subscribe. And this is Finding Values channel. Thanks for listening.